Have you ever walked into a car showroom thinking you're just going to have a look, and then walked out feeling like your wallet just went through an emotional breakup? One minute you're in control. Next minute you're sitting in a new car wondering how the price suddenly became slightly above your budget, but still manageable if you ignore reality. You're not alone. Today, we're breaking down something almost everyone gets confused by. Should you buy a car with cash, take a loan, or go for leasing? And the truth is, most people choose wrong for one simple reason. They focus on monthly payments, not total money lost. Let's fix that. First, imagine buying a car with cash. This is the simplest option. You pay everything up front, and the car is yours. No monthly payments, no bank, no stress. It feels powerful, like full freedom. You can drive as much as you want. No rules, no contracts. But here's the hidden problem. When you put a big amount into a car, that money becomes stuck in something that loses value every single day. The moment you drive it out of the showroom, its value drops. And while you own it fully, your money is no longer working for you anywhere else. So cash buying gives peace, but it can reduce financial flexibility. Now let's talk about the most common option, car loans. Here, you don't pay everything at once. You give a small down payment, and the bank pays the rest. Then you pay monthly. This feels easier, manageable, comfortable. And yes, you still own the car. But there's a catch most people ignore. Interest. That small percentage slowly increases the total price you actually pay. And over time, the car becomes way more expensive than its showroom price. And here's the biggest mistake people make. They don't look at total cost, they only look at monthly payment. A dealer says, it's affordable, only a small monthly amount. But what they don't say is, you're just stretching pain over many years. Now let's move to leasing. Leasing is like renting a car. You pay monthly, drive it for a few years, then return it. Simple. The benefit? Lower monthly payments and always driving a new car. Sounds perfect, right? But there's a hidden truth. You will never own anything. You can't modify it freely. You can't drive unlimited miles. And if you go beyond limits, you pay extra. And after years of payments, you return the car with zero ownership. No asset, no value, nothing, just receipts. Finally, there's a mixed option some people don't understand well. It looks flexible on paper, low payments, easy exit, options at the end. But this is where most people get trapped. Because flexibility often hides complexity. And complexity usually costs more money. Now let's make this real. Same car, same price. Cash gives ownership but locks your money. Loan spreads cost but increases total price. Leasing lowers monthly pain but gives zero ownership. So what's the real lesson here? The best choice is not about what looks easy today. It's about what your future self will thank you for. If you like stability and long-term ownership, buying can make sense. If you want flexibility but still want to own something, financing can work. But if you only think in monthly payments, you will always feel like things are affordable, even when they're not. Because in finance, the danger is never big spending. It's small payments that slowly drain your future. And that's the real trap nobody talks about.